Hey, Vinicius Brasil, Santa Clara real estate guy with a market update for July 2022. And today, just going to talk to you about what's going on with the market. A lot of changes in the last few months. We'll talk about what's going on right now and what to expect. All right, so without further ado, let's take a look. Okay, here I'm right on my website, santaclararealestateguy.com. This is where I post these blog posts. I also send it out in an email. We post this video on YouTube as well and share it on our social media platforms. So basically, what I have here is a blog post summarizing some of the points that I want to make. And the first thing we talk about is the sales which happened in the previous month. So in the month of June, we had 50 single-family homes that closed escrow. That's about 3 more than the previous month, but that number is still lower than what was last year. I think we were in the 60s around last year, and it was lower than the previous month of May, I should say April. So definitely less transactions happening now because the market is slower. There's more homes on the market. They're sitting there. Buyers are now more cautious. They're not as aggressively bidding like they were before. So we're not seeing as many transactions. And of course, because of that, we're seeing inventory levels swell up. Right now, currently, just checked this morning, the number of single family homes for sale in Santa Clara are 65 homes. As of writing this blog, I think it was around a little over 60. So back again in June, average price of a home sold in June was 1.9. That's about $70,000 lower than what was closed in May. Same thing for average cost price per square foot. It decreased from 1,329 down to 1,269. And then of all the 50 homes that actually sold in June, 42 sold over list price. They did so around 10% over compared to 70% over the previous month. Well, what to take away from this is the sales that happened in June were homes that were in contract in May. And part of May was still a market where some buyers were behaving aggressively and still offering good prices on homes. That's not the case now because the cat's out of the bag. Everyone knows the market's dropped, and the new comps are starting to be released right now here in July, and we'll see that. So I suspect next month's market update is going to be a substantial drop from this 1.9 figure, right? So not a whole lot of data that we can gather from this previous months, in terms of where we are right now in the current market, but we can start to see things slowing down from, May, I guess I would say from April to May, right? Because these are always a month off. We can start to see the price already starting to drop, right? And another place that you could see that if you subscribe to our Altos market, if you subscribe to our market reports from Altos, and if you look here on Santa Clara, you'll also see, the market action index, which is their proprietary metric for following the market. You can see it was right here around 90 on April 29th, and then started to drop, and it started to drop in May, and now we're down to 76 as of July 1st, and this updates every week. So if you're following this, you would notice like in April that number is dropping down, and it's dropping down fairly good. On I guess May 20th, it's already at 83 from 90. A little indication that the market's slowing. Not a big indication that the market was going to correct, but a little bit of an indication, right? And kind of give you an idea of what to expect moving forward in terms of, is the market getting tougher for buyers, or is it getting easier for buyers? And conversely, tougher for sellers or easier for sellers. All right, getting back to our website here. So basically, some of the points I want to make is homes are still selling. So this is not 2008 all over again, where there were no homes selling. We're actually seeing some homes sell, and it's of course not at the rate that we were experiencing in the previous months. But as of June, there were 34 homes that went into contract in June. So I should suspect in July that the closings are going to be around 34, somewhere between 34 to 40 homes that are going to close here in July. So again, lower than that previous month's figure by a good amount, by like 20%. So they're still selling. Of course, lower prices, and we'll see that later. And I did post a great video about the market and how the market shifted. There's a link here. I'll provide it here on this YouTube channel as well, and you'll see it on the YouTube channel, and it really goes into some good depth about what contributed to that market and why it was so heated and why it crashed, or I shouldn't say crashed, but why it corrected so strongly, right? So market slowing down, we see a lot more inventory. Home prices have dropped a significant amount, and they're going to drop more. Now, they're not going to drop by the same rate that we saw in the last 2 months, but they are going to soften more. And they're going to soften more because there's just more inventory that's going to come on the market. Right now there's 65. Inventory kind of for the last 3 weeks was kind of hovering around 60. It dropped as low as 55. And I think that was more because of the big holiday, July 4th. A lot of sellers reluctant to put their home on the market during that time. And now that we're past that holiday, we're seeing a lot of listings coming up, right? So we're up to 65 today. It's Thursday. We might see a couple more by the end of the day. And of course, a couple will go pending, but we're going to remain in the 60s. And I guess by the end of the month, we're probably going to be up into the 70s, right? And that's going to cause homes to sit on the market longer and put pressure on sellers to start dropping their prices. And what's going on with inventory? So we talked about that. Inventory is going to increase. This is the time of the year where we typically see most of the homes on the market. Summertime, late spring, and we're right almost in the middle of summer here. So moving forward from July to August, we're going to see inventory, grow. And I'm not sure where it's going to stop. Definitely, I think we're going to get to 70 homes. Will we get to 80? Will we get to 90? I don't know. But by the time you really get to 70 homes, that's a good amount of homes on the market. And that really slows down the market. Anything beyond that is just an incredibly slow market. And, the more homes, the less or the more difficult it is to get your home to stand out, right? And the more pressure there is from other sellers that are in that specific segment of your market that are going to be dropping the prices to get their home sold. So you want to avoid selling your home on a time when there's a lot of homes. So you either want to put your home on the market as soon as possible to avoid that. Otherwise, you're just going to have to wait. And you might have to wait a long time, to be honest, if you want prices to rebound. All right, other factors in the market. So, interest rates, stock market, those two things have remained pretty much at the same level in the last 3 weeks, if you look. So interest rates kind of spiked up a little bit. They dropped back down. I think a 30-year fix on a national level is around 5.5 right now, maybe 5.6. Stock market's been going sideways. We've had some up days, we've had some down days. And what I can tell you about that is the stock market's going to do what the stock market's going to do. It's obviously not convinced that there's any great news out there. It's not rallying. So if any bad news comes out, you can expect more selling. If any sort of indication that the Fed is going to change their policy comes out, we probably would expect a big rally. But as of right now, it's staying where it is. If depending on who you're listening to, maybe it's going to drop further. Maybe it's just going to kind of drop slowly, kind of like what we suspect real estate prices to do. As far as interest rates are concerned, the trend is upward right now. The Fed is in this process of slowing the economy down, and they're basically destroying money or taking money out of circulation. So if there's less money in the market, well, there's less money to lend, and that's ultimately going to push interest rates up. So we can expect interest rates to just kind of gradually move up, unless, of course, the Fed takes further action and increases rates, right? Okay, so what can we expect moving forward? Now, buyers, I don't say this very often. I'm the kind of person or agent that's going to tell you it's a great time to buy because, buying is never really easy to do here in Santa Clara or the Silicon Valley in general. But I'll tell you, this is a rare market. I've been doing real estate here in this area for about 20 years. And out of those 20 years, there's only been 3 or 4 years that we've had markets that have been slow or decreasing markets, right? So they don't happen very often. And, it's really tough to be buying a home in a market that's appreciating, competing with multiple offers, and very stressful. So it's a rare opportunity that you can find a market where there's lots of homes sitting around, prices are going down, and chances are you won't be competing or you won't be competing with as many offers. So absolutely great opportunity for a buyer to get in there and start looking. and be picky. Now you can be picky and find the right home. And that's something that was hard to do before when the prices were showing up, right? So another thing to also understand, yeah, interest rates are high. You can't afford as much, but prices have gone down. And understand that, hey, you'll get in probably in with the 4.5%, adjustable rate mortgage, maybe for 7 years. But rates are going to come down. And why do I say that? Well, they have to. The economy just cannot grow without low interest rates. It just can't do it. So understand that this situation with the Fed, it's likely a temporary situation to control inflation. And once that gets controlled or eased downward, you're going to see a reversal in policy. And that reversal is eventually going to lead to, the stock market picking up, of course, and of course the house market picking up and prices starting to go up again. So buyers, start looking. Now is a great time. Sellers, well, if you didn't sell your home at the beginning of the year, you missed out on possibly what was the greatest seller's market to ever sell a home. So yes, frustrating because you might have noticed one of your neighbors has sold a home for an incredible price, and here you are just a few months later, and you're nowhere near that price. But that's the reality of our market. And depending on where you are as a seller in terms of, you have to sell or you have to be somewhere at a certain date, or you don't want to put your whole life on hold for any more than a couple of years, then you really got to think about what you need to do to sell in this market. So again, watch that video about the market shift. I put in some tips there for sellers about what to expect in this market and what you would have to do to make sure your home stands out and you get a good price in this market. Of course, if you've got any questions about your home and this market, feel free to reach out to me. Always happy to help you in any way that I can. And of course, this is out there for you guys to access. It's online on my real estate website, SantaClaraRealEstateGuy.com. So, thank you very much for watching this video. You know where to find me in case you've got any questions, and I hope to see you next time.